Good morning. My name's Carol Harmer from the International Trading Institute, and today we're looking for patterns really. There's one in sterling at the moment, which is quite an important one. So what I'm going to do is I'm going to take you over to the chart so that you can see what I'm talking about. Okay, what you have here is sterling made a big move up. I still can't get used to calling it sterling cable. It's made a big move up. Okay, you think of this as a pole. That's what you need to think of it. So you've had all these consecutive days where the market has traded higher and higher and higher. You look to here and you can see that it made a new high but closed towards the open of the day. It tried yesterday, couldn't do it. It's trying this morning. At the moment we're trading at 132.66. Now if we can't break up through this level, what you've got is an upward waving flag pattern. And what that means is if the market was going to continue higher after this initial move up, you would have seen a downward flag, which would be lower highs and lower lows. With this particular pattern, you're seeing higher highs and higher lows, but with no momentum behind it. If you can look at the momentum indicator, you can see that it's quite high. So we're looking for the turn. The RSI has turned. The stochastics have turned, okay? And you have a bit of divergence on these stochastics. So this is how you can preempt trade in this market. What you're going to be doing is looking to sell up towards this area here. Your stops can be quite tight because the algos obviously will try and run the stops through and take us higher. But we know what they're doing, so we can place our stops accordingly. Okay, they only do it once. They very rarely go back and do it again. They've achieved what they wanted to do. They've stopped everybody out, and the inexperienced trader will be left long and wrong at the top. So this pattern, as I'm saying, is a topping pattern. It's called an upward waving flag, and what you should see is it come down towards the 38.2, you've got a trend line coming in there as well, towards the 38.2. Markets can retrace to the 50%, where you would catch this moving average, the 50-day moving average. Oh no, sorry, that's the 50-day moving average. You would be catching the 18-day moving average. So you've got a lot of support in that area. You also have what I love to call round figuritis. And what it is, it's when the market aims for a big figure. At 130, 135, 140, that sort of area. Those sort of numbers. So you're waiting for the market to come off of this. And if we go up higher more than 30, 40, maybe even 50 points above that, what you would be seeing is that the market is looking to take stops, and it's not really going to have a projected move higher. The indicators don't show that. What they show is that the market's going to come down, correct, and then possibly move higher. But at the moment, you are not buying into dips. I would be selling into strength with not so much a tight stop, 50-point stop, a 40-point stop, just to make sure that stop hunters don't get you out at bad levels. I think sterling's going to come down. I think the dollar's going to go a little bit stronger towards sterling. I'm not saying the sterling move is over by any means. I'm not saying that. But at the moment, You don't want to be caught long of this market, okay? As I said, because everything is showing you that we're going to retrace, we're going to come back towards more manageable levels, and then we rethink. But at the moment, with these patterns and the indicators all saying that we've reached a short-term top, you'll be playing this from the short side. So you'll be selling into strength. Okay, well, I hope that's helped clear up a few little things. I will be doing more pattern recognition because for me, I think that that's one of the most important aspects of technical trading. And if you can look for these patterns, if you can recognize these patterns, believe me, it will help your trading no end. It really will. And obviously, the more experience you get, you can preempt where the market's going to go and stop. So as it goes towards your key levels, you take the view, you preempt that pattern, those indicators are all showing it to go lower. So you'd be looking to sell into any short-term strength that you see. It'd be lovely to actually sell with the algos go wrong. So that's my point, is that once you start to recognize these patterns that happen every single day across all time frames, once you learn to recognize these patterns, then it will increase your risk reward. It will increase your confidence that this is what you're trading, you're seeing it for yourself, and it will increase everything that there is to increase about a professional trader. You know, you will be looking for patience, and that's the art, I think, of technical trading, is that you need to be patient. You need to wait for your levels. You need to watch what the market is doing, what the market is telling you. What is it telling you? And at the moment, this one's telling me that we've reached the top short term, and we're going to correct and trade lower. Okay, well, I hope this has been helpful for you. And it's Friday. Remember, interbank closes at midday on a Friday. So you could have thin and whippy markets, because that's what happens on a Friday. If you like these videos that I post onto our site, which is the International Trading Institute, then please go to our channel, click like, subscribe, and you'll be able to see these videos as they're being posted. Okay, good luck, and have a nice weekend, and I'll catch you Monday.